Hey everyone, welcome back to the Market Surveillance Alliance. And today I'm just gonna chill, have some, I think it's Brazil diamond coffee. So the fact of this, kind of like Uganda, Papua New Guinea coffees, that they're not too acid. So if you're drinking a coffee that's very acid, then don't do it. It's bad coffee. Probably, I'm not gonna say Starbucks because they are making some improvement, and the Milano in Milan, Starbucks is brutally amazing. But what I will say is that slow down on the coffee acidity, and you will be able to actually. I think it's in my 4 cup. Okay, so I'm gonna. It's delicious. So I'm gonna just start the day, and what I like to do when I'm training investors and some traders that they need like a push and they need to be pulled into the direction of understanding they can do more if they focus on less. Less is more, okay? But also you have to understand that sometimes you will have the opportunity to trade a lot. Are we there? No, we're not there yet. But at some point, it will be a probability that for those of you that have accounts that you're allowed to day trade, that will be an option. So you just have to prepare yourself. It's like having a business. There's a time for expansion, and there's a time not for contraction, but to slow down the pace of some of the few investments you're doing. That's very important to understand. So today, I'm just gonna chill, take a time with you, and look at the basics of what I'm doing right now with our team, our community at MSA Live. We also have the MSA Market Surveillance Alliance portfolio. So there's a lot going on, and the way I'm building the company, or basically, in a sense, the service for my publisher. So that's not a secret. So let's take a look. Let's jump. Let's go to TradingView. This is what I use. I get the question, what package do you use? Hey, you can go use Transpire. It's not a secret. I also use Hawkeye. Here is you have Hawkeye. I'm studying NDX. That's the NASDAQ. But when I'm looking at this structure, I will be going full clean. And for that, I use TradingView. Again, Transpire, you have bar charts, stock chart. All of those options are valid, okay? And for example, Helen Meisler, she actually still used print paper. So it's whatever you want to use that. So it's just looking for levels. Now, I'm looking at the Q because a lot of people are concerned, like the US made a bad call taking out, for example, Exxon out of the Dow. The US doesn't make those kind of mistakes. And I don't know if I should say I feel sorry for some Americans that they're not proud of being American. I'm very proud of being from the Caribbean. And although my dad abandoned my mom and my brothers, my siblings in 1985, no alimony at all. I think he gave us like $1,000. He's a New Yorker. I don't think America is a bad place. I just think it is what it is. It happened to me. And you look to make the best out of every single scenario in your life. And I'm not joking. This is not some kind of copy or publishing stuff. My dad is a New Yorker, and he abandoned me and my siblings with no money at all for like 20 years. That was pretty sad. But what it means is you have to be proud of who you are at all costs. I'm pretty sure Russians, they're still proud even they're invading Ukraine. And the Ukraine, they're also proud in defending themselves. Now, that's a very tricky, very sad scenario. War is always bad, although an inflationary situation, it has consequences. But my point is, when you look at technology, a lot of people missed. Now, the whole point of Amazon from $40 to $3,500 and Netflix from $6 to $500. Now, everyone wants that. It's gone. But it doesn't mean that there's no growth opportunity. Now, the growth won't be on subscribers. Talking about Netflix. So pay attention because you need to see where we are. Now, I'm just going to take out my, absolutely looking for the daily, as long as we're under the 20. Every time you see one of my videos, the 20 exponential moving average, it's orange. That's the color orange right there. Let me just hide it for a second. All right. Now, if we really think about what's happening, there's a full range that goes all the way from the levels, the pullback back on September 20, all the way to this breakout level at the top of February of 2021. So if I would say this is the range we're working with. And to understand what may not happen in the near future just based on technical analysis, there's no reason to keep listening to Morgan Stanley, Mike Wilson. Love you, bro. stop killing the US market. Although he actually said that in 2023, probably Q2 of 2023, he expects an acceleration in the US equity market. So that's actually good. So he's not like full bearish. He's just trying to say at the end of the day, okay, what happened is that we need to deleverage and reassess, kind of reset our expectations. And in that sense, there's going to be an amazing master reset in a few industries. We'll talk about that in future videos. But the whole thing is, you don't really need to be a Morgan Stanley or listen to Goldman Sachs or Bank of America just to have an idea. If you look at the range, you go for all the way from this bottom to this high, that's almost 77 points. And if you look the breakout, you get 68. So give and take, that makes sense. Now, this was a full expansion, 29%. The projection out of the box, that will be 20% to the upside. Can it go higher? Of course, can go higher, which means at some point in time, you don't need 100 years. We will have absolutely, once again, a new market high. Like it or not, it will happen. But before that, the market is kind of taking out those companies that don't need the cash, because you cannot be in every single position. Not everyone can, not all the money can go in, the money cannot go in different directions. So the money will be rewarding those that actually make money. That's the name of the game right now, revenue. I will say one of the reasons to buy a stock besides the short-term speculation. Now, judging at this area, because we basically in this point which we were before, and this point not too far from the bottom of that pullback back in September 2020. Now, honestly, Mike and Harnett from Bank of America, they're not making mistakes. Now, if you look at what retail may think or not think, if you have actually another 29% to the downside, that will take you to 184. That's the little pullback all the way to April of 2020 before the rally, all the way to that high. So in that sense, don't be surprised. That actually has the potential to happen. That right there, we have 120 points, and that was the market recovery. Okay, so what's the message of this video? As I have my no acidity coffee from Brazil. The message is, these levels are non-existent. Non-existent is not the expression, is they're not new. They're not new. So you need to be prepared for all different scenarios. If the market drops, and if it actually does it this time, because so many bearish, the sentiment is super bearish. I think, Isabel Nat, they work with sentiment indicators. They think they express we're neutral, but we are nowhere to greed it. So there's a lot of opportunity to go higher. Now, if that happens, unless we are within this area, what you need to think about is that for the last 2 years, we're going nowhere. You actually made your money by taking profits or place a protective stop loss of your profits. Otherwise, for the last 2 years, nothing happened. So it's good for you if you're starting trading, and if you're investing, it's easier because you can easily index yourself and add to your IRA or IRA Roth. And if you're outside the US, you can clearly start putting some into some new fresh capital to work. Because even if you actually were to be, if you're just investing, think about this. If you're investing, this is what happens. You're from this point to this point, you have a drawdown of 36%. That means you're not losing. Now, I don't want to say anyone like a drawdown is a drawdown. A drawdown is, in fact, a drawdown, and a severe one, if 24 hours, you need your money. But if someone is here for 5, 10 years, that 36% means nothing. And what you will realize in the US, and it is happening with a lot of women, they are actually buying the dip. And they're buying the dip because they're not looking just to buy the dip because expecting a rush into new highs right away. No, it's because they are actually in accumulation phase, because they understand what happens every time the US gets in a crisis. Like it or not, at the end of the day, if you take 5, 10 years, we will see new highs. If you're a day trader, the story is different. Of course, you're going to have a headache with that. But don't think that this is not something doable, that some Americans are taking advantage. The most important for today's video is, first off, be proud of who you are. Doesn't matter if you're the aggressor, if you're the victim. If you're a victim, be proud to be a victim. Now look for a solution. If you're an aggressor, be proud, but just remember, you will be the aggressor until your victim fights back. And when it comes to the stock market, yeah, we'll look to take advantage, I must say, of short-term, medium-term moves with options. That's what we do. But I never take the eye off the target. The target is the only thing that is worth trading right now is U.S. markets. So if you're American, doesn't matter if my dad is New York and abandoned our family in 1985, it doesn't matter. Be proud of who you are. Take into consideration that this is the most liquid and transparent market. Yeah, I mean, you have Nancy Pelosi and her husband, that's fine, but it's worth it. Now, these are levels where we have the Qs. The American technology is going nowhere, and you want to pay attention. Guys, thank you so much for watching. And never forget, someone always is right. Someone always knows.